G'day guys, welcome back to the Devon Too Good Investing channel. So just the other day, Micron dropped their Q2 fiscal year earnings. So we can have a look at their financial results. We're going to have a look and talk about the good and the bad and everything in between. But guys, before we get into it, make sure you like this video and subscribe to my channel. So in my opinion, it was a very good quarter for Micron. They did grow their revenue and margins sequentially, and they came in at the high end, well, actually above the high end of their guidance. SSD products achieved record revenue. Auto market revenues also achieved an all-time high. They're starting to distribute their newest DRAM and NAND technology, being the 1 alpha and the 176 layer NAND technology. And they're gaining momentum towards the transition to DDR5 RAM, as well as growing their mix in the NVMe data center SSDs. One place that Micron has been excelling recently is operations, and they have reaffirmed with us that the COVID-19 lockdown in China is having a negligible effect on the business, and also they're maintaining that they do not expect any near-term production impact due to the Russia-Ukraine war. However, they do expect to see some cost increases as they secure supply of certain raw materials. This is due to inflation. So in terms of their three main, you could call it business segments, we've got data center, we've got PC and graphics, and we got mobile and intelligent edge. Data center revenue grew more than 60% year over year, which is really good to see and makes a lot of sense. Cloud companies such as Amazon with their AWS, Microsoft Azure, Google Cloud, they're all investing heavy capex into their cloud businesses, and their cloud businesses use Micron's memory chips. In terms of PC and graphics, we're seeing strong demand in terms of enterprise PCs, and these PCs typically use more DRAM and NAND as they tend to have higher specs, and the demands on these PCs are higher. For example, in the industry in general, you're going to be running more intensive softwares and that sort of thing. However, we did see some softening, which we'll get into later, in the low-end PC market. And then in terms of mobile and intelligent edge, we're still seeing the transition from 4G to 5G. And in terms of auto revenues, we set a new record high, and they're expecting over 100 new EV models to launch worldwide in this calendar year. And also about 60% year-over-year revenue growth in the industrial segment, which is fueled by factory automation and security systems. In terms of outlook, the outlook actually has remained unchanged from the previous quarter. They're still expecting mid to high teens bit demand growth for DRAM, as well as approximately 30% growth for NAND. We're seeing healthy supply-demand balance across both DRAM and NAND, which is really good to see, as this is what would derail Micron potentially. And in terms of non-memory component shortages, I believe they're talking about GPUs here. Let's all be honest, we all know GPUs are really short. We're expecting that further improvements should support memory and storage demand growth for the rest of the year. So that should ease as we start to move quarter over quarter and even into 2023. And in their conference call, they did mention that they expect some of these effects to expand out into 2023. So yeah, just keep that in mind when you're projecting out for Micron. In terms of revenue, it has came in at $7.8 billion for the quarter, representing a 1% increase quarter over quarter and a 25% increase year over year. So this is strong growth year over year, and we can see that it's slowed down quarter over quarter, and there's two main reasons for that. The first main reason is due to the Chinese slowing economy, and as a result, purchases of new smartphones have slowed down. However, I think over the long term this won't matter, as people are still going to purchase smartphones. That ain't going to change. And also we've got the 4G to 5G switch, which uses a hell of a lot more DRAM and even more NAND. And then the second reason was due to a slowdown in PC purchasing on the lower end of technology. So pretty much I see that being due to COVID, and as a result, there was a lot of pent-up demand that got pushed forward, and now we're having to compete against those tough numbers. In terms of the DRAM and the NAND split, DRAM made up 73% of the total revenue, and NAND made up 25% of the total revenue. And moving out into the future, I do believe that NAND will grow faster than DRAM. This is backed up by the company's long-term outlook. And NAND has higher margins than DRAM, so this should lead to margin expansion over time. In terms of bit shipments, this increased in the high single-digit range quarter over quarter for DRAM, and bit shipments for NAND were flat quarter over quarter. And then average selling prices decreased in the single mid-digit range for DRAM quarter over quarter, and then ASPs increased in the mid-single-digit range for NAND quarter over quarter. And I think this year the ASP is decreasing for DRAM. That's something that would concern me. However, I'm not all that concerned, as I do believe this is mainly due to the slowdown in mobile phone sales at the moment, and due to just some supply constraints with GPUs. So I'm not overly concerned about this. This obviously will affect margins, as if the average selling price goes down, obviously Micron make less money. But I think it's clear that demand is still strong. So I'm not worried about this at the moment. In terms of revenue by business unit, we can see the compute and networking unit was very robust year over year. It grew 31%. The mobile market, there's plenty of tailwinds there. However, it did go through a tough quarter. In terms of storage, very robust growth, and also in the embedded business unit, 30% year over year growth. Quarter over quarter, we can see that not so impressive, but I already mentioned my reasons for why that is. So overall, they came in with revenue of 7.8 billion, gross margin of 47.8%, and we can see that they ended up in the end with a diluted EPS of $2.14, and cash from operations of 3.6 billion, of which flowed into just over $1 billion of free cash flow. The company has committed to buying back shares, and they do expect to give 50% of the free cash flow back to shareholders via buybacks and dividends. The company's in a very strong balance sheet position. They've got $14.4 billion in liquidity, and in terms of net cash, they've got $4.9 billion there. So that's going to be, that's going to make them flexible. With that money, they can reinvest back into their own business, or they can buy back shares or give us dividends. But overall, I'd say this company is very shareholder friendly. They've generated $9 billion of free cash flow from financial year 19 to financial quarter 2 of 2022. And of that, they've given back a bunch of returns to shareholders. We can see $5.8 billion returned to shareholders in the term from share repurchases, convert premiums, and dividends. In terms of Q3 guidance, we're expecting even stronger revenue, even better gross margins, and even better diluted EPS. So, look, I'm very happy about this guidance, and I think guidance will continue to be strong throughout the year, in my opinion. So, guys, that's the earnings right there. Overall, I think shareholders should be happy with Micron's earnings. They're showing supply side discipline. There's strong demand growth in cloud within their auto segment. And also, we should see strong demand going from 4G to 5G phones. They're rebuying shares of their own company. They're distributing free cash flow to shareholders. They're expanding margins. Yeah, they're really executing well, and they've given some good guidance moving out into Q3. So guys, hope you enjoyed this video. Make sure you like, make sure you subscribe. See you in the next video.